Buyers are left blindsided while lenders are staying silent, and I don't think they're keeping anything from you intentionally. However, I think there's lenders out there that don't offer these types of loans, and some lenders just aren't aware. I'm talking about getting a mortgage for a house when you're self-employed, or if you don't have any tax returns whatsoever. I get it. I too am self-employed, and we write a lot of stuff off, and when we write a lot of stuff off, it saves us on our taxes, right? Unfortunately, the net income that we're left with shows that we have very little income to purchase a house. You see, being self-employed, you can make $500,000 a year, but after you write everything off that you legally can write off to save on your taxes, well, your income is pretty much shot. You got expenses, you got overhead, you got supplies, you got rent that you pay, whatever it may be. That $500,000 may look like a lot, but it dwindles down to little or nothing. Your income is shot. Especially when you go to buy a house and you get a loan, they say, well, you're only approved for $125,000. And that's when the frustration sets in and you're like, geez, man alive, this is ridiculous. Until now, this new loan program, grab a pen and a piece of paper, you're gonna wanna write this down. You see, this mortgage works very different. Let me explain how. They don't need your tax returns. They run off your gross deposit. So for example, if you own a pizza restaurant, you're selling pizzas every month, you sell pizzas, you make a gross deposit before you pay employees, overhead, supplies, or anything. You're an electrician, you're a plumber, you're a real estate agent. It doesn't really matter. They take your gross deposits over the last 12 months and then they divide that amount by 2. So for example, I'll tell you a quick story. Couple made $2 million in deposits. They make a lot of money, they have a lot of write-offs. And I know it sounds crazy, but if you're self-employed, give me a thumbs up, you'll probably agree. You can make $1 million and be left with literally $150,000 because you have overhead and expenses and employees and all of that, right? Couple owned a restaurant, they literally had $2 million in deposits. Well, they simply took that over 12 months and they divided that by 2, and that's $1 million. And in that $1 million, they divide that by 12, and that's how much income you get approved on. So to make a long story short, those people bought $1 million home. Now the exciting thing about this is, you know as well as I do, that we write a lot of stuff off as self-employed, and a lot of that stuff that we write off, it's all legally that you can write off. There's so much that you can write off that the government allows you to write off to actually save you money on taxes. The difference in that is when your money gets dwindled down, you can't get approved to purchase a loan. But you know as well as I do, you're probably sitting on some cash, and if you've got a little cash and a decent credit score, this may be the loan for you. You see, another quick scenario is I've had a contractor before who rented a place to have his trucks. He rented a house. He didn't own a home. He had to rent a place and rent a house. The house that he rented, he couldn't keep his trucks there because it was in a smaller neighborhood. Well, here's what he did. He was able to purchase a house with a loan like this, stop paying rent to have his truck, stop paying rent on his house, actually bought a house with a little bit of land and a workshop where he can actually put his trucks. That way, he no longer had to pay rent for his trucks. He no longer had to pay rent on a house. He bought a house, owned a house, and literally had a place for all of his supplies. Now, a good question that you probably want to ask is, what about your credit score, Wayne? What does your credit score have to be? Your credit score has to be at least a 660. If you got a 660 credit score higher, this will work. But don't get discouraged, because there's lenders out there, and I'll be glad to recommend one for you. You can go to contactwayne.com. We have the lenders that do this. Just shoot me your information, we can get you connected. If you got a 660 or higher score, they will work with you to do a rapid rescore. They'll tell you exactly what to do, what you need to do, how to do it, so within 30 days, your score gets bumped up. Now, another question that you probably have is, Wayne, how much cash do I need down on these types of loans? Well, you're gonna have to have 20%. That's a lot of money, I get it. However, you don't have to pay PMI. You see, if you're self-employed, and there's a lot of people out there that are self-employed, they have some cash set aside. They've got some funds set aside, even though they've written a lot of stuff off. You got 20%, you put 20% down, you don't have to pay PMI. So for example, on a $500,000 home, your PMI is going to run you anywhere from $250 to upwards of $350 a month, just because you don't put 20% down. Now, I do have some more information with me. Thank you for being there with me. If you like this so far, give me a thumbs up, like, share it. If you haven't subscribed to the video, my name is Wayne Turner. For 30 years, I've bought, flipped, sold. I've helped thousands of people buy and sell their homes. And I just shared this information with you because I'm a big firm believer. Nobody's paying me to do this. You learn something, you get really, really good at it, and then you share it with others. That's just the cycle of life that I believe in. Another question that you'll want to ask is, what is the rate? Well, the rate is going to be a little bit higher. So if the rates right now are running 6%, you're probably going to pay 7% for two reasons. One, if you get over that $600,000-$700,000, you're kind of in a jumbo loan category, and they consider those a little bit higher risk. But you have to understand this, that even though you may pay a higher rate, you're putting 20% down, you don't have PMI. You have to understand that if you didn't do that and you waited 2 years, you're going to have to totally adjust your write-offs and probably pay the IRS a couple of $100,000 just so your income gets bumped up in the next 2 years, so you can qualify for a house that may give you a little bit of rate, but by that time we don't know what the rates are going to hold or be in the future. And that's when it clicked for me. No PMI, not having to wait, saving cash, not paying as much to the IRS, and I can buy a house now. And I'm kind of impatient, I want to buy a house now. But listen, you have to understand, I am in no means whatsoever, and like I mentioned, making any money off of any lenders or getting any, none of that. I just believe in sharing this information because I'll share a quick story with you. I started selling real estate 30 years ago. Well, I went from a job that was a salary job to being self-employed. When I went to self-employed, I had to wait 2 years to have seasoned income to show my self-employment to be able to go and purchase another house. Now, if you're out there watching this and maybe you own a house and you have equity, well, you can roll that equity into another house. So there's people out there that are just like me right now that maybe you started a business and you're like, man, we can't move. We'd like to move, but we can't move because we have to wait. You don't have to wait. You can use the equity in your home as the 20% down. You can sell your house, roll it into another house, and they're only going to look at your credit score to make sure you're at 660, and they're going to look at the last 12 months of deposits. They're going to divide that by 2, and that's what you're going to get approved on. Now, another question that you may have is it an adjustable rate? No, absolutely not. These are fixed rate. You can put them on 15 or 30. And you can sell the property at any time. Some people say, well, Wayne, is there any kind of prepayment penalty? Is there anything that I should know? Listen, it's a fixed rate, 15, 30 years, got to have 660 or higher credit score. You're going to put 20% down. They're going to take 12 months of your past bank deposits to show that you're actually making money and putting deposits in. They're not going to look at your tax returns. They don't need them. They don't want them. That's what's kind of crazy about this. And I've been doing this stuff for 30 years. And when I seen this type of loan, I was like, wow, this is going to open up so many more doors for people. I can't wait to shoot a video to share it with you. Because if you know somebody that's self-employed or you yourself is self-employed, you owe it to them and yourself to share this video, to get it out to them, to like the comments so more people can see this type of loan. And at the end of the day, this is where it all boils down and all works out to. As a self-employed person, you know what you can and can't write off. You know what you can and can't afford. And lenders know and agree and realize the exact same thing. That's why they're rolling out this type of opportunity for so many buyers out there. So listen, thank you for watching. My name is Wayne Turner. Until next time, be sure to like, subscribe, comment, ask any questions, and God bless.